Sandip Sabharwal also joins into our conversation. Sandip, hi, good morning. Before I ask you your overall view of the market, wanted your view on a couple of stocks. The stock, that soared last week was M&M, up 7.5%. In fact, I think the stock hit a fresh 52-week high as well, or lifetime high of about 1,078. Would you put in any more money in M&M?
I think M&M is moving up more because of a lagged effect. So we've seen that earlier, we've seen Tata Motors and Maruti move up significantly, and M&M was stagnant during that time frame. And in fact, we saw some of the smaller stocks like TVS, Ashok Leyland also move up substantially. So I think it's more a makeup which M&M is making. I don't think there's any significant event or any significant thing which has happened to impact M&M positively. If at all the event which has happened is negative in terms of the kind of predictions which are coming for the monsoons, which could actually impact tractor demand negatively.
Okay, Sandip, now for that overall question, should one tank up on the so-called Modi stocks even now, or is it at this point a better strategy to wait?
So I think it's a better strategy to wait, because my view is that the positivity is built up substantially, but some negative factors have come in. One are the geopolitical issues related to Ukraine, which all of us know about. Second also is this prediction about the monsoons. And I think there are significant poison pills which this government has put in for the next government, which will create revival to be an uphill task, especially if we get a poor monsoon. Because if there's a good monsoon, inflation is not an issue, then the government can move strongly on revival. So I think now it becomes imperative for a strong mandate to come through. So my guess is that some of the high-flying names will give up a bit over the next couple of weeks. And some of the mid-caps, the high-flying mid-caps which have run up very substantially, could see a severe sell-off also. So I don't think that the index in terms of the Nifty will fall more than 250 points. But I think some of these high-flying mid-caps could fall 15-20%. And that could create an opportunity for people on the sidelines.
Okay, which stocks are you referring to? What would be stocks that you will buy on dips?
So I think some of these stocks which we played on the long side, like Crompton and Greaves, like something like Apollo Tyres or something like Arvind Mills, all these stocks have run up substantially. So these are large, established mid-caps, very liquid. But they have run slightly ahead of fundamentals, even stocks like Voltas. So I think all of these could correct significantly over the next couple of weeks. And if they actually correct 15-20%, they actually provide a good opportunity to buy for investors.
Okay. What would you do with the stock like ICICI Bank now?
So I think ICICI Bank is very well placed to capture the growth in the future, given the kind of capital adequacy they have. And to that extent, my view has been that ICICI Bank will eventually capture the gap between itself and HDFC Bank over the next 2-3 years. So I think this is a stock to buy on any strong dip. So I think the results were not very good. So it could also see a correction as the markets correct, because it has been one of the leaders in the up move. So that's how people should play this. So I think stock is around 1250. So if by any chance people get it 1150 at 1150 odd, it should be a good level to buy into ICICI Bank. I think the one other thing which I would like to point out is on technology stocks. I think any market fall which comes through, which creates a contra move in IT stocks, should largely be used by investors to exit IT stocks, because IT stocks are likely to underperform significantly in my view over the next 1 year. And a stable government will create a strong rupee, and the weak rupee has been the big factor for the increase in margins of IT stocks. So I think that's one segment people should be cautious of.
All right.
Would your take be on banks?
I think PSU Banks will be the leaders of the next rally. So, and to that extent, whichever picks one wants to make, I typically go with the larger ones like Bank of Baroda or SBI. So I think those could be the banks one should play for. And whatever happens over the next couple of weeks, subsequently people should play with them. Although the consensus continues to be that private sector banks will lead the rally, my view is that the bigger issues were with the PSU banks, and any stability or improvement in the economy benefits them more. So that's the space which should do better than private sector.
Okay. Sandeep, what is your view on the one or two sectors that could see the maximum thrust of reforms once the new government comes on board, and something where money can be put in right now?
So I think clearly the focus is going to be on investments, because investments which create jobs is going to be the focus of the next government. And to that extent, the first revival should be on the roads project, which was the key pet project of the previous NDA government. So the stocks which are focused on roads, so there are companies like IRB Infrastructure, Sadbhav Engineering, ILFS Transportation, and few others, which are focused on this segment. I think they could be clearly very strong beneficiaries and should form a part of any investor's portfolio. The second thing being talked about is all these new cities and rail links. So although there are not too many rail stocks to play for, like they are very small, most of them, but still if investors have to make a cocktail of stocks among them, those could be clear beneficiaries. So I think among the smaller mid-cap segments, these stocks should form a basket of stocks which investors should hold.
What about oil and gas? I thought you would say that.
Yeah, oil and gas, like if you remember early part of the year, I said PSU oil companies are the best bet for this year.
You did,
and at that time, people were very surprised.
And the stocks went up quite a bit, I mean, in your
so
defense.
if you see BPCL and all, I think they are 40-50% already. So now they have come to reasonable valuations, although they are still lower than fair valuation. So let's see the pace at which oil reforms happen. My view is oil reforms will happen, and they'll happen very fast. So as they happen, these stocks will still create value. But the key is that...
What do you mean by oil reform? Will diesel prices be raised 50 paise and brought to market? Or will he also touch LPG and remove it from that 12 subsidized cylinders and make it 6? What exactly should we understand by oil reforms?
See, oil reforms is more of diesel, because diesel subsidy should go. Diesel and petrol prices should be market linked. LPG is a political hot potato. I don't think it's going to happen so fast. It will happen over a period of time. And I think one thing which might happen is that kerosene is something which hardly anyone uses now, and it's more used for pilferation into diesel. So I think there some steps might be taken to reduce the subsidy on kerosene, which itself is a substantial amount.
So you will go with all the oil stocks at the moment?
Yeah, oil stocks, all of them, like IOC, BPCL, HPCL, all are well placed.
Okay, one last question then. There are 4 big earnings coming out this week. There's HUL today, there's Bharti, JSPL and Sesa Sterlite, amongst a whole host of others. Anything that you would put your money on?
I think Bharti looks well positioned, because especially after last week's Docomo announcement, it's going to lead to further consolidation. So telecom continues to be a contrarian play. It's not played out so well till now this year, but I think it's something which should play out.
All right, Sandeep. Thank you very much for joining us this morning.